Welcome to today's video whereby we'll be going through another trade recap. So today it's 29th of May 2026 and we didn't take any trades, but then I'm going to show you where there were potential opportunities where I could have taken trades but I didn't, and why I didn't take such trades, right? So without further ado, I'll just jump into the chat and show you. So during market open, pre-market actually, we swept London's high, right? And then on Nasdaq only, on ES, we actually didn't sweep any high. So we had an SMT pre-market, right? Meaning Nasdaq was leading to the upside while ES was lagging. So we're gonna look at Nasdaq, and again, Nasdaq was already at an all-time high before market opened, right? Before the New York session began. So if I go back here, you can see this was our ATH, and then we just put up a new all-time high. So we'll play a few bars. We have that, and then we have that, meaning we are bullish. Oh, and by the way, going into the day, my daily bias was bullish. Why? The 4 hour was bullish, the 1 hour was bullish on both indexes, right? Which means I was supposed to look for longs. But then now we have put up new all-time highs on Nasdaq and probably on ES as well. So even on ES, right? Which means if I was gonna look for long, or if I was gonna take longs, there would be no draws of liquidity that I would target or any highs on my left hand side, you see. So going into the day, I was actually not looking to trade at all once I saw that we put new all-time highs. But then the only time I was going to consider taking trades was if these new all-time highs were just liquidity sweeps, right? High resistance liquidity sweep, and then we were probably going to break structure down and maybe get some form of 5-minute retracement. Then I was going to take shorts there, targeting low resistance draws of liquidity to the downside, right? So let's see what happened instead. So both indexes put up a new all-time high. So let me play a few candlesticks. There we go. So then we started retracing. I was still looking for buys here, even though we didn't have a clear liquidity sweep down here. I was still looking for buys. This was not an A plus setup, by the way, just an A setup which could potentially work, right? So the first trade that I was looking to take. So let me mark this level gap here so that I know once we break it, then we are now bearish. And then this side, what do we have? We also have this fair value gap down here. So can now remove that. So I was looking to take trades. What time was it? 10, yes. So I almost took longs here. You see, on this retracement down, we broke structure into the fair value gap, right? And then we invest this fair value gap out, right? So I was looking to take longs here, but then what was I gonna target? If I took longs here, I was simply gonna target this high, right? And then my stop loss would have been down here. So the risk to reward ratio was not looking good for me, which was 0.59. You see, so I didn't take this trade because the risk to reward ratio was not good. So instead I waited, and then what happened was we actually changed order flow from bullish to bearish. So let's focus on Nasdaq for now, because I believe it is the one that's gonna inverse first. Let's see. There we go. So Nasdaq inverse this fair value gap first, right? And then ES, what did it do? It also inverse this fair value gap. Now what are we looking for? A form of retracement to the upside. Now we can consider this move up to be a liquidity sweep of a London's high, sorry. And let's see, could it be, okay, let's seeing Indian highs. So that was an all-time high. Okay. So yes, we can consider this to be a liquidity sweep and a break of structure down, right? Now, what are we looking for on M1 or on M5? Actually, some form of retracement into either this fair value gap here, right, or equilibrium. So this is yes. To have a big also. There. We have this fair value. So we're gonna go to M1, right? Now, what are we gonna look for? A break in, meaning we have to break this to the upside. Right here, going up into the fair value gap. This was a trade which I was gonna take, but I didn't. So let's see on ES also, perhaps a break in here as well, right? So let's see what happened. See this. Okay, we decide we actually invest this fair value gap here. There, invest that, meaning if we break structure down on both indexes, then we're gonna take shorts on either ES or Nasdaq, right? Even this side we invest this here. So what we're looking for is simply break of structure down here on this low, move this to here. So a break of structure down there, and this side is gonna be break of structure down here. So far, unless if we put a new low, then we're gonna target that one, right? So let's play a few more candlesticks. Actually, let's count this side first. This is the one which we are closer to breaking the structure down, so we're gonna monitor it. Okay. Okay, so I paused there. Let's see this side. So you see we put out a new low here, which we broke. We broke down. Right. So this is a trade which I was supposed to have taken, but I didn't. Again, let's see which index is leading to the downside. I believe ES is the one that is leading down. Yes, it is, because you see already below that. This side we are above this low. So we're gonna take the shorts on ES. Right, so we're gonna say sell. Targeting these lows, right? And where was my stop loss gonna be? It's gonna be all the way above here. Now you see my stop loss was 637, which is another reason why I didn't take the trade, because the stop loss was far. The only time I take a trade is if the stop loss is very close to my entry, meaning I'm willing to risk 250 USD and 500 USD at most, right? I don't go above 500. If the stop loss is above 500, then I don't take the trade, because the risk to reward is not good in my favor. It's not looking good for me, right? But then for the explanation of this video, I confirmed what are we targeting? We have to target at least 637 USD, right? Because that's how much we are risking. So that's gonna be somewhere there. It's not looking good, but okay, let's put it at 6. There. So this was the trade which I was supposed to take, but I didn't. Now let's play the pass and see if our stop loss will hit or not, right? These horizontal or these draws of liquidity were our targets, by the way. There's hourly low, there's London's low, there's Asia low, right? So let's play and see. Okay, so that means our first take profit was hit here on this hourly low, right? But then for the point of this video, I didn't put my first take profit there, just entered one mini lot and not a micro lot. So let's continue. Let's see if our the London's lows were gonna be taken up. There, even London's lows were taken up, meaning our second take profit was hit in this case, right? And then here, this would have been our last take profit. But now, is it gonna hit or no? We don't know. But let's just wait and see. Oh, and by the way, once we hit our take profit, we move our stop loss to break even. We lock in at least 100 USD or 50 USD so that when the market moves into the opposite direction, we don't have a negative trade. Oh, right? It doesn't close in a negative balance. So let's see if our third take profit would have been hit or not, which would have been the London's low, right? Where we placed our take profit, that's just us using a 1:1 risk to reward ratio because we were risking 637 USD. So we should at least aim for that amount also, right? So we'll see if it hits or not. If it doesn't, then oh well, it didn't. But then our setup worked perfectly because we did target up and we did take out all two draws of liquidity, the hourly low and the London's low. So basically our take profit were hit, but then we'll see if the third one will be hit or not. So let's see. Okay, then we got stopped out at break even. There we go. So only take profit 1 and 2 were hit. The third one was not hit, right? Now, what happened here again? News were released when we had this big move up here, this spike. News were released. Trump tweeted again. So Trump tweeted and he moved the market into a different direction. So that one cannot be avoided. Actually, the only way to save yourself from that is to use a stop loss so that in case this happens, you don't blow your account, you see. But then again, this was the trade that I was supposed to take, but I didn't take it because of the risk to reward ratio. The same goes for this one. Remember I said I wanted to take buys here, but I didn't take them because of the risk to, oh no, this one was not because of the risk to reward ratio, but it was plainly because there were no draws of liquidity to target in the upside, right? Meaning if there was, then I would have taken the trade and would have been stopped out down here, right? But I'm glad it was all-time highs and I didn't take the trade. Overall, no trading day for me. Guess what? That's good because no trading is also trading because you lose nothing for that day. You see, meaning if I forced trade and I lost, that would have been a bad trading day. I would have violated my rules. So instead, I stick to my rules and I didn't trade because of minor things like risk to reward ratio and not having draws to target. Right? So that's it for today's trade recap, and I hope you probably walking away with something from what I was showing you this evening. And with that being said, I will see you guys on to the next video. Thank you and peace.